A capital market is a market for medium and long-term funds. Here funds are exchanged between the supplier and those who seek capital for their own use. So what is the share market? What is the capital market? Beyond 1 year is capital market. It is by the shares, the instruments that are having a maturity above 1 year is being traded here. Okay, and share market or capital market is a zero-sum game. When you make profit, someone incurs loss. When someone incurs profit, you make a loss. So somebody is making profit over somebody's loss. Somebody is making profit over somebody's loss. Okay. So like Adani shares are falling. Who is making profit? Hindenburg and short sellers like them are making profit. And remember, in share market, whatever goes down goes up. Share prices of Adani crashed to 1017, and by yesterday it reached again 2200, right? So whatever goes down goes up. So whenever you feel low in life, think about the share market term. Whoever fails, he also wins. Okay, whatever goes down definitely goes up. Clear? So don't feel low if you find yourself in a bitter spot in life. Okay, features of capital market: it is a link between saver and investment opportunities, deals in long-term investment, utilizes the intermediaries, determinant of capital formation, and also government rules and regulations are attached to it. The instruments of capital market: equity, share market, which is highly influenced, or the major portion of the capital market is equity market. And sometimes by capital market we mean share market too. Equity, after equity it is preference shares. Preferential shares are something extra beyond the equity shares. Equity means the shares are normally called equity. Why it is called equity? Can anyone tell me why it is called equity? Because when a company divides its capital into shares, it divides it into equal face value. If company is having 1000 crore or say 100 crore, and if you want to issue shares, he can issue it in equal denominations. So everybody who is buying one share will be having a similar face value. Okay, generally rupees 1, 5 or 10 are the face value of the shares, and they are traded in a premium price in market. So similarly, after equity shares are called ordinary shares. After ordinary shares, there are preferential shares or preference shares. Preference shares are something above equity shares. If company is winding up, company is liquidated, the last one to get the capital or last one to get their dues are the equity shares, and before equity shares the preferential shareholders will get it, and preferential shareholders are entitled to get a dividend, whereas equity shareholders may or may not be given a dividend, but preferential shareholders will have a mandatory dividend payout. Okay, debenture and bonds, ADRs and GDRs. Debenture and bonds are the bonds or the debt instruments or the corporate or government bonds. Debenture are generally the private sector bonds. ADRs, American depository receipts. So any company who wants to list itself in American share market, like Nasdaq, New York Stock Exchange, he need to get a American depository receipt. Anyone who wants to raise money from Europe, they need to list themselves with a GDR, Global Depository Receipt. Then the derivatives are the share market, are the future and option market. Okay, so capital market is having two types: primary market, secondary market. At the end of this session, we will go in detail with the primary market issuance, IPO, FPO, etc. So capital market, primary market means when the company for the first time issues its share to the public is called primary market, or the IPO. Okay, IPO and grey market are the examples of primary market. If before IPO there is the grey market, we will not go through that. But IPO, or the initial public offer, when the company goes public for the first time, it is into primary market. When the share is issued for the first time of LIC to the public, and it is called IPO. But once it is issued, how you can buy the shares? You can buy it from stock exchange, but you can only buy IPO through bidding. So secondary market is the stock market is called the secondary market. Clear? It is as simple as that. If you are a public sector banker and eligible for promotions this year, then you have landed at the right channel. In last 3 years, we have produced more than 5,000 results in bank promotions exams, starting from Reserve Bank of India to SBI, PNB to IDBI Bank, Punjab and Sindh Bank to Bank of Baroda, Indian Bank to Central Bank of India, in all public sector banks. We have a dedicated course for you, and higher the scale, greater the content is. So don't miss out this opportunity to grab your promotional aspirations this year. Visit our website, check out the links in description, or WhatsApp us at the given number to connect with us. Stay prepared and wish you success this year.